So looking in review, $28 silver all the way down, called the bottom at 18 and a half. I was wrong. It went slightly below that. And now we've had a couple of Fridays that have been very, very strong. I do believe the bottom is in.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And as you may well be aware, we did have SilverFest III this past Saturday. It was a great time. Pleasure to see so many of you there. And I know a lot of people were asking already about the replays, and especially a lot of people who were not able to attend. So we are going to start rolling those out. First one will be today with David Morgan, where he provided his year in review of the silver market in 2022. So with that said, let's take it away to Silverfest with David Morgan.
Welcome back to Silverfest III, and quite fortunate and excited because what other way could you start a silver festival without the silver guru David Morgan of the Morgan Report? So David is checking in from the Red Pill Expo, and David, sure appreciate you making some time to join me, and great to see you. And how's everything going this morning?
It's pretty exciting. I've been in the Red Pill a few times, and it's an honor to speak anywhere, and especially with one of the most well-known people, G. Edward Griffin, writing The Creature from Jekyll Island. So I'm looking forward to it. But thank you for inviting me here and letting me kind of kick this thing off, Chris. I do appreciate all you've done. As many silver stackers and others are well aware, you've certainly been at the tip of the spear here for some time now. I remember our time together in New Orleans when you and Yars gave me a ride to the airport. We had a big chat about silver and what your visions were. And here you are a few years later at SilverFest III already. And so you asked me to review the silver market. And I did a quick study on it. And that's why I want you on the call with me. But, you know, looking over the chart for the last year, I mean, we've seen silver up, you know, the $28 level. Premiums on the retail side are higher than they've ever been. I've seen high premiums on the retail side a few times. For example, in the bag or junk market, as it's referred to, Y2K, we got about a 40% premium. Why? Well, there was a certain percentage of the population that thought that the Y2 rollover would have massive computer problems, and they bought bag silver in the event they needed to barter. That's the short story. Then, of course, in the 2008 financial crisis, what we saw was, again, huge premiums across the board, but it only lasted a few months. I wrote an article about arbitrage and what could happen and suggested people consider taking advantage of the high premiums, maybe selling and buy back later. It wasn't a very popular article, but that's what happened. But it's different. As we love to say, it's different this time, and it has been. The premiums have stayed high. They've gotten higher. They backed off a little bit. But the premiums on the Silver Eagle are astronomical, as we all know. So looking in review, $28 silver all the way down, called the bottom at 18 and a half. I was wrong. It went slightly below that. And now we've had a couple of Fridays that have been very, very strong. I do believe the bottom is in. And the relentless, nonstop purchasing of the silverbacks, the silver community, silver squeeze people, and a lot of it has to do with education. And you've been doing a great deal of that with a lot of people that are on board the silver story now. So many, I mean, you know, Rafi and Alistair McLeod and Ronan Manley and all the people that will be on there, Robert Keynes, and I don't want to leave anybody out, you know, Bob Coleman. I mean, on and on it goes. And so I'm certainly not the lone wolf anymore. Not that I ever was, but it was lonely at the bottom. So the price has deteriorated. I think we've bottomed. We're coming back up. But the main thing to remember is, number one, it's the people's money. And all we really need is to take the power in our own hands. And that means to stack silver, and the community does. Secondly, that the price is not a reflection on value. And when you have silver in your hand, you have a negotiable instrument. So just because the spot price is X does not mean you can't negotiate something with that ounce. You just have to be willing to do what we do in a free trade market. I'll give you this ounce of these 10 ounces for X, or I'll exchange it for so much labor or whatever. Not saying that it wouldn't stay close to the spot price. All I'm suggesting is that if you can get a premium on an ounce of silver that's stamped by a government, and yet one that's identical to it in weight and purity is $10 or $12 less. Look at it objectively and think, why would one be worth so much than the other when they're both fungible? In other words, if you put them in a melting pot, they're both exactly the same, 999 fine silver and 1 troy ounce. So I'm not trying to disparage the American Silver Eagle program. And I did an interview recently with Tom Power, who I've known for years. And certainly there are questions that were raised from that interview. I'm well aware of that. But back to on track. I mean, once we got up to the $30 level, it looked like we were going to break through. Then Rostin Benham from the CFTC comes down and talks about tamping down the market. I mean, if that isn't a blatant admission of what's really going on behind the scenes, I don't know what is. And of course, all commodities are highly leveraged, except silver's more leveraged than any other commodity by a factor of probably 3 or 4. I mean, even in the oil market, which is the most important market that there is, there's only a few days hedged out, where in silver, that's like 7 months. So it varies, of course. So why don't you ask me some questions, Chris? I know I've got a few more minutes left. I probably didn't do as great a review as people want, but I just, I've been such a big picture guy for so long, and silver's a very important, probably to me, the most important part of the story. But again, unless people know it, learn it, are educated to it, we're not going to see much happen. And we are seeing a lot happening. We've never seen the kind of degradation in the physical market between the COMEX and the LBMA at the same time. So we are having an effect.
Yeah, it certainly has been a divergence where we've seen paper price come down while we've seen a lot of signals of demand, not just on the retail level, but also, like you mentioned, on the LBMA and COMEX. So folks in the chat, get your questions ready. We'll be able to take a few questions for David. Although one that I'd like to run by you, David, is just as we look at this chart, which you talked about, we had silver over $26 back when there was the Russian invasion of Ukraine, and then just getting hammered throughout that as the Fed was raising interest rates. Going back a year ago I guess we were still learning that the Fed was going to be raising interest rates, but is this what you expected, something like what we've seen this year? Do you think that we've seen the bottom end, or just as you look back at what we've seen in 2022, does it fit to you? Were you surprised by a lot of what you saw, or what would you say about that?
Well, you gave me a couple. I'll answer the easy one first. Is the bottom end? I'm pretty certain it is. And then, no, I didn't expect the interest rates to have that big an effect. I expected to see a knee-jerk reaction because people that are really not trained on the macro picture understand how interest rates reflect inflation and how it really works, that, of course, the mainstream press would say interest rates higher, bad for gold. The fact is, in the 1979 run up to 1980, interest rates were going higher and higher and higher, and gold was going higher and higher and higher. And that's what happens. And so my premise has been, and it's accurate based on monetary history, is that raising interest rates has little effect in the longer term until it gets above the inflation rate. So that means we've got to see like 7.5%, 8% interest rates to be on par with inflation. And of course, if we use shadowstats.com, John Williams statistics, we're like at 15%. But regardless, use the 8%. So it's had some effect, more than I expected. But yet you see it bouncing back. What made me kind of laugh the other day is that inflation cooled off somewhat and the metals went up. Well, wait a minute. If the metals are supposed to be a reflection of inflation, it's cooling off. Why didn't it go down? There's no real rhyme to reason in these markets anymore, other than the amount of leverage that's in them. And as the leverage starts to break apart throughout the sector, I mean, it'll break apart we already saw it in the oil sector where we got negative $40 a barrel for a day or two's trading. We've seen it in the ags. We'll see more of it in the agricultural markets. We may see situations where some of these markets go to cash markets only. In other words, there will be no futures contracts. And that could happen in the silver market. It's, from what I can see now, and I don't want to be overly optimistic, but we could be, I didn't say would be, could be at a point where the paper markets really start to be questioned by not only the insiders, but people at large. And that wouldn't be day after tomorrow, but I do think it could happen within the first half or first quarter of next year.
Well, I think that's what a lot of us have been wondering about for years, and interesting to see the signs of something more along those lines playing out. And one question we had coming in that touched on something you said earlier, Tony mentions, how do we maximize the value when the crash comes with silver to actually acquire things? Do you think we go to some sort of barter scenario, or how will people actually be using the silver should we get to that point where you have the exchanges not be able to deliver some sort of outcome like that?
Yeah, great question. As you know, at the risk of repeating myself too many times, when I wrote the 10 rules of silver investing, I was asked to make them pithy. And the first rule was no one wants to be a prophet of doom. And the unlikely event of an all-out financial collapse, silver will be the money of last resort. Gold will have too high a unit value for day-to-day transactions. And so that implies that we could, again, not would, get to a barter situation. Now, we don't have to be in a monetary complete collapse to, negotiate with silver coins. But could it get to that level? And I'd say yes. Has it in the past? Absolutely. Would it be pervasive? Would it be across the entire country? Probably not. Would it be across the entire world? Probably not. But it is something, and there would be, it'd be a free market, basically. You would have so much silver coinage in whatever form, junk silver, silver rounds, government pressed silver coins, and negotiate the value therein. If there's no paper market, then you'll go to like a cash market, and the market itself will become more free, and it will self-determine over time. It may not immediately, but it would be very close. Once it's a free market, then the free market will prevail, and people will negotiate what the value is, and it will come more in line with like what the mining ratio is. Not saying it goes 7-1, but it could certainly move down from the 80-1 it is right now. So still long-term bullish, still think that what we need is more participation. We need more people to understand the story of honest money, honesty, and a financial system that works for everybody. Remember, there's 2 billion people on the planet that live at $3.20 a day or less. There's 700 million that live on under $1 a day. There's the biggest bifurcation of wealth and power ever in the history that we have, that we know of. And this is not right. It's far from correct. And in an honest money system where everyone uses the same articles, say gold and silver, that's a much more level playing field. So hopefully I answered that question. Yes, we could get to barter. Will we? Possibly, but we don't even have to get there to use it that way.
Well, I hear what you're saying, and I think that's one of the things that is one of the perhaps self-selecting mechanisms of the silver crowd, where I think most people just want to see a more equitable system rather than what we have now, where things seem to be dominated by Wall Street and what the banks are doing. Although, David, along those lines, we have a great question following on. You touched on this a little bit, but Jake asked a 5-year silver projection. Let's say we're looking back and doing this in 2027. What do you imagine has happened in those 5 years? And obviously, we don't know the future, but any thoughts on how some of this could have played out by then?
Definitely. Of course, this is kind of a linear projection, which is always wrong. We do what's called least squares linear regression, which means a curve fit. And if we do that, what we find is that, as I've said in other interviews, the amount of silver required just on the industrial side alone over the next 8 years will probably take us to 100% of the market or thereabouts. The other thing is, where are we in the world system? And that is, we're in a huge contraction, which means less copper, less lead, less zinc, and that's 70% of the market. The other part is oil. I believe we are at peak oil or close to it, and we're near the energy cliff, which means that if, let's say, the price of diesel doubles, that's 25% of the capital expenditure for a lot of mines. So that would double, that'd be 50%. So it'd be uneconomic to mine silver on some of the primary silver producers. So there's a lot of factors that are lining up together at the same time over the next 5 years that do project a silver squeeze, basically. And in a squeeze situation, you usually go parabolic and things go overvalued. And silver hasn't been overvalued for a very, very long time. It's been undervalued for a very, very long time. So I think the next 5 years is going to be probably the part of the silver story that goes into the financial record books.
Yeah, I certainly think that is possible. And one last question, perhaps, before we let you run. Tiffany asked, are central banks investing in silver like they are gold? To my knowledge, so far, we haven't heard any banks investing in silver, although we do have the talk from the BRICS nations of a basket of currency that could be backed by commodities. So have you seen anything along those lines yet, or could you see that happening?
I doubt it'll happen. The bankers basically off silver back in 1873, as I've said many times. The Wizard of Oz is a book all about the silver story. The Rail Brick Road is going to the Emerald City is paving the road with gold, going to the bankers' green paper money system and putting out the common people, the scarecrow, the tin man, etc., throwing them out. The common man can't use silver anymore. And of course, in the actual book, Dorothy had the silver slippers, and all she had to do is click them and take her back to Kansas. And in other words, to be grounded in the people's money. So you can look at that. In fact, there's a film called The Secrets of Oz by Bill Still that's for free on the internet. You might want to watch that. So rein me back in. What was your question? Oh, bankers. No, they're not going to buy it. Now, there is a bit of a story there. First of all, India, one of their main banks, has silver, but the rumor, or the best of my knowledge, is that it's not LBMA grade or COMEX grade. It's not 999 fine, and it's kind of a holdover from the silver standard. I am pretty aware, and it's from a good source, but I don't want to ever say anything that isn't as accurate as possible. Russia seems to be having a bit of a silver hoard. Now, they're not using it on a monetary side. They're using it on a strategic application side. Remember, silver is vital for a high-tech society. It's also vital in a war scenario. So anyone that's worth their weight in gold knows that silver is critical if you want to keep society at large going, especially in a situation where communications, electronics, warfare, satellites, all the stuff that we have in our modern technology is vital. So yes, Russia, I think, has stockpiled silver, but not for monetary purposes. India probably has some. It isn't monetary grade, and no one else, to my knowledge, gives a darn about silver. One last comment, and thanks, I think it's Tiffany that asked me. If you really want to take a look at it, go try to find an interview that I did. I did this lecture 4 times. It's called "What If Silver Was Treated Like Gold?" That's the name of it. What if silver is treated like gold? And what I point out in that interview or that lecture is that silver from 1270 until the last 120 years never got above a 20-to-1 ratio, because both silver and gold were used as money up until 1873. And really through 1964 in some ways, because we had 90% circulating coins in the United States. And once it was demonetized and only used for industrial purposes, that's when its value as money ceased. So my point in that lecture is that if silver was held by the banks, the price of it would be astronomically high, because they'd have to keep it, let's say, at the monetary ratio of 15-to-1 or even 20-to-1. And so that's something you might want to think about. I talk about a lot of things in those lectures. The first one I did, I think there is the brick that you have up there, Chris. Thanks for that. So we, the people, are going to have to put silver back into the form of money. It's not going to be the banks, but that's where the power lies. When we have that money and they don't, think about it. Especially, it's more valuable. Why is it more valuable? Because again, you cannot have so many things in our society. I can't talk on this phone without silver. So it really is a more valuable commodity than almost anything that exists except for oil.
Yeah, it certainly is. And it's funny where even before seeing some sort of monetary premium being placed back on, we're already seeing the market in a deficit the last couple of years. Some of the projections for the solar demand out of the energy, the Office for the Energy Renewable Agency, I mean, along with that, the Stop Inflation Reduction Act, the projections they call for over the next 30 years, it seems like we're either going to need a lot more silver, which would require a higher price, or we're going to have some sort of gap going forward. And then, of course, you tack on everything that's going on monetarily, where it seems like we're nearing the end of the road. I think even whichever way you look at it, a bright future for silver. So, David, I appreciate you making some time to join us. I know that you are out there at the Red Pill Conference, so thank you again for fitting us in here. People always love hearing from you, and it's great to have you at SilverFest III, and just appreciate you being here.
Well, thanks for having me. I appreciate it much.
Well, thank you, David, for sharing that review of everything that he's been seeing in the silver market in 2022. That was from this year's SilverFest, which we held this past Saturday. It was great to see many of you there. And unfortunately, we'll be sharing all of the panels from that event over the next coming weeks. So hope you found that one helpful. And before we wrap up, would like to thank Silver Viper, who was one of the companies that appeared at SilverFest. And fortunately, they were there talking about their recent acquisition of Canisil Resources, which happened last week on November 7th, where 4 shares of Canisil Resources will get you 1 share of Silver Viper in the new proposed entity. And one of the things Steve Cope talked about was the Nora asset, which is one of the 10 assets in the Canisil portfolio that has done some extensive drilling on it in the past year. And I know Silver Viper is excited about moving that forward and continuing to de-risk that project. You can find out more about the deal in a call that we recorded with Steve Cope last week on the show that is coming your way now.